lots of people start to say it's just about perfect, that's when you should worry, Jay, but you know that. Ian Shepherdson of Pantheon Macro does some fantastic work. Let's make it a little bit more macro. Job openings in America pushing 11 million. Jim Karen, this can go three ways. Ethan Harris and Bank of America did some work on this. Allow me to fold that into the conversation a little bit. Either supply constraints can ease here and payrolls can surge, they can persist and wages will have to climb. Or here's the third option for you, Jim. This demand's time sensitive and this demand starts to diminish, erode. The companies just start to do what they need to do without these jobs ever being filled. Option one, option two, option three. Out of those three outcomes, Jim, what are you looking for?
Well, I think one of the scary things is that we are getting higher productivity, but we're also getting it with less workers. So the issue is, according to what Ethan Harris is talking about, I think he's onto something correct in terms of thinking about the scenarios where what if we do start to get good GDP growth and higher productivity, but the jobs don't come back. The recent JOLT survey, the job opening and labor turnover survey, showed about 10.9 million jobs, potentially open in the U.S. economy right now. And the fact of the matter is that it could just be a mismatch of skill sets, which that could be. Then that could create some wage inflation, meaning that there's still going to be, even though there are a lot of people on the sidelines that need a job or are willing to go back to work, there could be a skills mismatch, which means that that labor doesn't show up. So there's still a supply shortage of qualified skilled labor. What that does is it pushes up wages even higher. We're already seeing commodities, we're already seeing the input prices, raw material goods also go up. Now, John, put those two things together. Higher wages, higher raw material goods, that is cost push inflation. So that's not the good kind of inflation. Demand pull inflation is a good kind, where you get this better productivity story, where you get really good growth, and then, prices go up because of that. That's fine. But I think what Jay Powell is worried about, and he alluded to this at the Jackson Hole Symposium in his comments, is that if the Fed starts to see cost push inflation, he didn't say those words, but he talked about wages and input prices, which is cost push inflation, that the Fed would be ready to act. So this could be something that is good in the near term, but ultimately could create a more aggressive Fed down the road, because this is not the good kind of inflation that we may see.
Jim, you and I have got to have some time together and talk about the policy discussion for the Federal Reserve. We'll have some one-on-one time in about 5 minutes. I want to spend a little bit more time with Wei Li of BlackRock. Wei Li, this global outlook, for me at least, I'm trying to remain really, really humble about the moment we're in, because I think the range of outcomes into next year is incredibly wide. Now, two-part question for you. One, do you agree with that? And two, does that not just complicate how on earth you put together an outlook when the range of outcomes is really wide?
I 100% agree that because there is no template to really follow in navigating an economic restart that we're experiencing right now, the potential range of outcome is extremely, extremely wide. And that is why we could see potential kind of things leading to market volatility here and there. That is also why we're seeing a huge gap between kind of where the yield levels are versus where growth levels are, which is why we believe that yields would push higher from here. Now, because it's so wide-ranging in terms of where economies can go, we believe that it's very important to have an anchor, have a core belief underpinning our global outlook, underpinning our asset allocation, and here really recognizing that what our pro-risk view is predicated on the elevated growth levels, elevated kind of still earnings growth. And here we talked about margin potentially coming back down, but recognizing that it's coming from record high levels, so still really elevated level. And at the same time, central banks are still supportive, even as we head into taper, because the mandate around inclusive employment is still way away from being met. So all of that kind of combined together, we think that the path for risk assets to push higher is becoming narrower, but we don't want to get out of market at this point. We think that it's still pays to stay invested. We still want to be pro-risk.
Well, one place that you want to stay invested and remain pro-risk, and Wei Li, maybe we can have a little bit of time now to talk about it just for a few minutes, is China. I'm talking about a wide range of outcomes for the global economy and the uncertainty around policy. Front and center, the uncertainty around policy in China is fascinating. The regulatory regime, I think, is totally unpredictable. The economic data is clearly incredibly hard to read. We saw that with the data earlier this week. And we have a major property developer with a very uncertain future. Why are you so constructive on Chinese equities?
I would actually caveat by saying that our overweight currently applies to our strategic asset allocation view, but on a tactical basis, we're actually neutral China equities at this point. But one thing that I would say is that indeed regulatory clampdown has been leading to market volatility and spooky markets. But what we're also seeing is growth dynamics in China is just deteriorating from quarter to quarter. Beginning of the year, we had 17% GDP growth. Q2, we have 7%, and Q3, we're on track to 5 handle, and Q4, if the authorities don't do anything, we could be looking at a 2-3 handle GDP, right? So because of that, we believe policy incrementally across monetary, across fiscal, and maybe even from the perspective of regulatory intensity could become incrementally a bit easier because growth dynamics is so dire. Now, our overweight in China actually sits with the CGB, China government bond, because of the broadly easing environment that we believe we have been in and we believe we're heading into that is supportive for CGB, and also from a diversification perspective, it's been working out.
Welly, just on the Chinese government bond question, from a developed market perspective, if things go wrong and things get bad, I'll buy treasuries, I'll buy bonds. It's questionable when I'm talking about Italy. It's highly questionable when I'm talking about Greece. We've been conditioned by that experience over the last 10 years. Why do you think that the Chinese government bond market could respond like a developed market government bond market if things get dicey? Because if I start to see the dominoes fall in the property market, if I start to see things go wrong in China, I'm not sure my reaction function as an investor is the same as seeing things go wrong in the US. Things go wrong in the US, debt ceiling debate gets really dicey. I'm still going to buy treasuries. Why do you think the same applies to China?
I would say that the role for CGB in portfolio is actually different from the role for US government bonds in portfolio. And if you look at correlation between US government bond and European government bond, we're talking about 0.8%, really highly correlated. And that's good when risk assets kind of come under pressure. But the correlation between US government bonds and China government bonds is actually really, really low, 0.3. And that means actually CGB offers a different type of diversification to your global portfolio compared with the role that US government bonds offer in your global portfolio, which is why we think that for a proper diversified global portfolio, we just gotta have both.
Welly, thank you. Appreciate the nuance. A conversation we can continue another time alongside Jay Pawlowski. Jay Pawlowski, very constructive, bullish, talking a little bit more about Japan. We'll try and do that a little bit more next week as well. Jim Karen is going to stick with us to talk about this Federal Reserve. As yields break out a little bit, up 4 basis points on 10s through 137, through 191 rather, on a 30-year of 3 basis points there. Let's get you some movers with the China focus. Here's Abby.
Yeah, John, let's stick with the China theme because we do have one index on my screen here that is moving solidly higher against the small declines of the other indexes, and that is the NASDAQ Golden Dragon Index. It is up about 0.7%. It had been up more than 1%. You can see a lot of the China movers are sharply higher. This course, as China has added $14 billion in cash to the system, wanting to keep it liquid, especially around that property issue. Now, if we take a look on the week, however, it's a different story, and on the year, it's certainly a different story. Some of these shares really plunging. One index, that NASDAQ Golden Dragon Index, in fact, down about 50% from its February peak. But you can see on the week, the Hang Seng, the CSI 300, and the Hang Seng Tech Index all down between 3 to 5%. Big declines. And John, adding pain to the picture is the fact that this is one of the first weeks for the K-Web, and that, of course, is the Chinese Internet ETF. There had been huge inflows, as you can see, week after week, even with the uncertainty around the regulatory picture in China. You can see this week there is a decline.
Abby, thank you. Up next on this program, it's Operation Get to the Weekend, and I'll see you on Wednesday. For the market, that seems to be the view. September 22nd, a Fed decision just around the corner. That's next from New York. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
The boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? Should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
The Fed's in a really, really difficult position right now.
The tapering decision, which we know that the Fed is looking at.
It's going to be hard to do so if the economic data fails to show up.
It's going to be something that the Fed is going to be watching very closely.
The Fed is going to make up stories to fit their story.
Whatever the Fed does or is looking to do could probably be viewed as wrong.
The Fed has already well telegraphed that they intend to taper before the end of the year.
The Fed is talking tough or whatever.
What happens at the Fed meeting next week? Powell has been so consistent of always offering a dovish tilt to these meetings.
If you hear a more hawkish response potentially from the Fed next Wednesday, which is going to be must-see TV, we'll all be tuning in, when we hear that press conference from Powell, I think that's another element that could create some spillover.
I'm not sure how sincere Emily Rowland was being right there about the must-see TV, but we'll pick up on the big taper debate next week from Monday. I know you can hardly wait. We've done a survey here at Bloomberg. 2/3 of economists surveyed by us expecting this to kick off in November. Not the meeting coming up. Mike McKee taking a look. Hey, Mike.
Good morning, John. Well, it is must-see TV for me because I'm going to be on the show.
For me too, Mike. I've got to anchor the show too.
Anyway, continuing with that survey, the other question that Wall Street wants to know is how long is this taper going to last? And about half of those surveyed say 7 to 9 months. Another half say 10 months or longer. A few think 1 to 6 months. That would be a very quick timetable. The reason this matters is the Fed has said it will not raise rates until after it is done tapering. So when do they start to raise rates? That's something else to watch for at this Fed meeting. There's the dot plot, and you can see to the right where the dot plot was in March before the June forecast. Do we see another change? Does anybody in the Fed bring forward a 2023 rate rise into late 2022? Wall Street doesn't think they will. At least our survey does not. The economists say at this point they think we won't see a rate rise until 2023.
That long. Mike McKee, thank you, sir. Just setting us up, framing next week. Tuesday into Wednesday, your decision on Wednesday and news conference. Jim Cohen of Morgan Stanley with us. Jim, thank you for your patience, sir. Your views are important to me, and I just wanted to get a final view on the Federal Reserve from you. What's the number one thing you're looking for in the summary of economic projections and or the statement or the news conference for that matter? Which one is it?
Well, the number one thing I'm looking for is any hints towards tapering, because we do think that the announcement of tapering was probably either a November or December event, likely to start in early 2022. Now, the thing that we have to remember is that we need to disentangle tapering versus tightening. Tapering is really in response to quantitative easing, and quantitative easing was there to really fix liquidity during an emergency situation from the pandemic in the economy. Today, we have to think about tapering as really fixing the plumbing. Right now, I think the Fed is buying too many assets, and it's creating yields that are lower than what they probably should be, and it's creating excesses in other asset classes. And that's the risk of bubbles and things like that that people talk about. Tightening is a form of controlling credit to the real economy. So what Powell said at Jackson Hole is that we need to disentangle these two components, that you can end quantitative easing, you can move into tapering, but tightening, rate hikes, might be a long way off. And I think the way the markets are thinking about things is very, very sequential. Start tapering. Next question, when do you begin tightening? Yep. It really depends on how the economy is evolving. So what Powell has to do is he's got to thread a needle. He's got to walk through the eye of a needle and try to explain to people over the next few months, because I don't think it's next week when he announces tapering, that these two things are not the same. Tapering and tightening are not the same, and that it's going to be really, really dependent on the evolution of how the economy starts to move forward. Remember, next year, inflation prints are going to start to move lower because the year-over-year base effects are going to push inflation in that direction. So there's going to be more air cover, if you will, for the Fed to be a bit more patient, continue to taper, because I think economic conditions will still be good, but we will not have the immediate risk of inflation that we have today, that many people think we have today, next year, because the numbers will just get better because of the year-over-year base effects.
Jim, it's a yes or no. It's a yes or no question. Given everything you've just said, do you think that Chairman Powell would not publish the dot plot next week if he had the choice?
Yes, I think he would not publish it.
Jim
if you had the choice.
Thank you, sir. It wasn't a great yes or no question, was it? Jim Cohen, Morgan Stanley. Jim, thank you. You know where I was going. Equities fading out of the open once more on the S&P 500. We've seen it so many times this week with his stock sector price action. Here's Dave Wilson.
Thanks, John. You've got 8 of the 11 main industry groups in the S&P 500 lower in early trading. Material stocks with the biggest declines. You had iron ore go below $100 a ton. You've had U.S. Steel come out and saying they're planning to build another steel mill. And so there's concern coming out of that about capacity. In terms of what's higher, energy, consumer discretionary, financials. And what's leading the way in financial stocks, Invesco. You had the Wall Street Journal report that Invesco may combine with State Street's asset management unit. You were talking State Street Global Advisors. So when you look at the asset management group, it reached a record in late August. It's coming down a bit. BlackRock dominates it, and surprise, it's lower on the prospect of two of its rivals getting together.
Dave, surprise, surprise. Thank you, sir. Yields up, financials doing okay. Up next, your trading diary into the weekend. This is Bloomberg. live on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now. You can see that even in the early start to back to school and back to college season, we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Twenty-five, 26 minutes in, the S&P 500 fading out of the open once again. We're down 21. We're negative 0.5% on the S&P. Wrapping up the trading week, looking ahead to next week. Here's the trading diary. What you need to be looking for, you, Mitch, at the top of the hour. Then into next week, the OECD publishing its economic outlook on Tuesday, a Fed rate decision on Wednesday, the Bank of England on Thursday with its own rate decision. Then Friday, check out the Fed speak on Friday, headlined by Chairman Powell and Vice Chair Crowder. From New York City, for our audience worldwide, this was the countdown to the open. Enjoy your weekend. This is Bloomberg TV.
If you look at China, if you look at US taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper, or when you might start to see rates going back up, particularly in the US. What might be useful just to explain a little bit is the focus that we've seen from everybody on China. Clearly China, huge in terms of the global commodity cycle.
From New York City,
London, in Sydney, in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics? There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What's making me really nervous today is that there is this accompanying surge in deaths as well.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response anticipated, and filling the gaps between an overextended public sector and a suffering
Naka-live siya. Anong oras na? Same time. Tapos yung kasama mo, nag-ano pa ng sa iyo. Oo! Bigit siya. May extra pa ko. Kasi kung siya magpadala, alam mo kung bakit? Kaya galit na galit yung amo ko kung siya sumama. 30 GD padala sa anak niya. Gago, wala pang 2,000. With 5,000 na lang. 4, ganyan.
Sige na ba kayo mag-uwi ka na mamaya? Oh, pinaligo-ligo mo ako, pinag-ihis-bihis mo ako, na size na. Sa duwa tani. Balo. Sino?
Lahat tayo.
Oo nga.
Doon na lang kasi pinunta natin.
Ay, bakit?
Huwag na pumunta doon na sa park. Sa park na, doon na, o gago. Mama, nag-grocery kasi ako. Maglakad tayo tapos magsandal.
Kaya ka na babae, ito dito niya talaga ibuga ang hangin. Kaya agay-agap. Ay! Wala la. Facebook ba? I love this old thing. OSN. ganitong nakahain sa lamisa tapos mukbang.
Mukbang talaga.
Dailin, ibaba mo nga doon ng ashtray mo.
Dawa niya ng kayo.
Pay ka talaga naawa sa akin?
Nanay ng Lucia.
Yung kasama ko nga doon, wala ka siyang puti eh.
Ngipin pa na ano. Mata.
Oo, pero magandang katawan niya, grabe. Matangkad pa siya, pang sport talaga yung katawan niya. Naswerte nga siya eh, kasi nakis na ng amo niya. Lahat ng ayaw ng amo niya, nakapunta sa kanya. Masakdal.
Bibigay ang amo niya.
Oo, ang bait ka. Marami siyang nandun. Mabago ko na. Ang talon pa, sila kalaki. Sila kalaki ng mga plate.
Ano, may bari?
Alam mo, dapat yung kasama ko, puro itim para ako lang medyo maputi. Hindi mo, pag kasama ko yun,
Isang babae na para sa dawas lalaki bitbit ang iyang 45 kalibre nga armas sa barangay niya sa President dito ang city nga liga itagugdan sa tawhan di investiga kan dayon dili ini ang mga di aresto sa otoridad. Kumaniin mo patay ang iyang babae.
o may bisita kayo sa pinagbabisan mo kaya dapat mapalagyan mo.
Indiana.
Kasi may kasama silang Indiana, kasama na sa ganda niya. Ang ganda niya. Ay, sabi niya, oh. Nagsasalita siya, Indian. Sabi ko, what? Sabi niya, you're not Indian? Sabi niya, no, I'm Philippine. Sabi ko, hindi nga.
English siya.
Hindi, yung salita ng Indiano ba?
O nga, nag-English ka.
Oo.
Kinabahan ka.
Gago bigla. Hirap ng habang kuko. Itulungan mo naman ako, matagal tayo dito. Mahaba kuko ko eh. Ayan o dito. Oh. Mahirap magbutunis, mahaba kuko.
Bihis-bihis na mga ganito, mga butod na mga tao.
Hindi man halata butod ko dyan. Aray!
Gago, ang tapang mong kumuha ng baril ba?
Ayun, di pa naisirado.
Isip ka ni isang buton, wala siyang nasira.
Matagal kayo ko nagbutunis dyan.
Bakit kasi tinanggal mo pa?
Ikaw ba ako?
Bubo.
Paano yun? Pag-din pa kasi, para alam mayaman gado. Wala pala pera.
Tatanong lang sa isip siya nagko sa pusil ba?
Sigo, ba't andyan sila sa labas? Gawin. Wala bang pulis doon? Palit-palitay mo lang papel. Gago. Where's your account? Wala na. On processing, sasabihin lang. Hindi ba, paliw pa kang katwiran. On processing, sir. Tara na. Kalmo. Kantan pa lang. Ate Lisa, bakit ka ng paa? Ate Lisa. Ay, sila lang. Ate Lisa. Wala naman ang wita. Pero parang ko nahulog. Ayaw mahulog.
Yeah, tara lang yan.
Kunin mo. Gusto mo? Hindi ko naman ano siya.
Hirap na. Huwag mo na ibigay mo na sa akin. Tatanggapin ko.
Oo nga.
Hindi nga.
Eh, ano ba yan dito sa harap niya?
Parang hindi siya pareho.
Pares kayo pa. Hindi, kasi nakat...
Gagugit siya. Sige na, Leo. May lighter ka? Ha? Parang mahulog. Mahulog ba siya?
He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Police Sobchak, who was then mayor of St. Petersburg. Bloomberg.
That's Leonid Brzezinski.
I'm a columnist for the Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
And of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I'm currently direct.
Three months after that, won his first or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. But he also line, take good care of Russia. That's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, these are his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia a regional power. Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which
Payment for order flow is controversial in the USA. It is prohibited on UK, Canadian, and other markets, but not when trading in the US. In the US, a market maker pays your broker to trade with your US stock order at a price he decides, but not at Interactive Brokers. We do not sell your order to a market maker. We try to match you up with an institutional order at a better price.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC come to China, come to us, say, 24. I was the only guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强，就像他的硬件，强就像他的系统，就是这方面确实没到。但是玩信息玩软的，中国的脑袋绝不比通常。我们在座的所有人的脑袋绝不比通常。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange, but it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Chen is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition.
Payment for order flow is controversial in the USA. It is prohibited on UK, Canadian, and other markets, but not when trading in the US. In the US, a market maker pays your broker to trade with your US stock order at a price he decides, but not at Interactive Brokers. We do not sell your order to a market maker. We try to match you up with an institutional order at a better price.
Hello, hello. We are live. Ayan. Kanina pa ako live. Okay, bounce back. Nagba-bounce yung price sa support area. Where is, maglagay muna tayo ng trend line. So ngayon, I'm earning $15. $15 sa almost 0.05 lot size. Kanina I lost $32 sa 10 lot size. 0.10. My God. Pero ngayon, we are earning back almost 100% per pips. Laki ng rest ko kanina. Yan. So, dito nag-bounce yung price. I'm going to draw this trend line para ma-analyze ko kung hanggang saan ang possible area ng prices. So now meron na tayong $15 which is nag-loss na tayo ng another $3. Pero we are expecting the euro to drop more. Marami pa tayong mga indicator tonight at around 10 o'clock before the closing price, the closing of the week of the day. Pero need kong mag-close before market close tonight. Nagu, ayan, maraming support area around this. Meron ako naka-trailing stop. So, saan kaya to? Okay, so another. So, dito ang confluence area ng support kung saan din yung aking target. Ito yung aking target price. Okay, target price is 7155 at meron ako sa 17092. Ayan, left edge. Hindi. Isa pang horizontal line para sa target price. Seven zero 7092. Halos magkadikit lang pala ang aking target price. 7092, ayan, 90. Pero 92 target price na yan. Halos magkadikit lang. So, malapit na. Mag-adjust muna ng stop loss. Ayan. Mag-adjust ng stop loss. Kung sakaling mag-reverse ulit yung market, we are gaining. Ayan, risk reward, 1:47. Pero actually, hindi na siya, wala ng risk kasi na-adjust na. Pero ito yung design ng aking risk reward. Ngayon, $14 is running down. Bababa ako ngayon sa mababang time frame para malaman ko kung need ko na bang mag-exit or wait for the target TP price. Ayan, mukhang medyo may rest na sa 30 minutes. Yes, medyo risky na 30 minutes. So, baba pa ako sa 15 minutes. Tingnan natin. Wala si Jack. Busy pa si Jack. Ayan. Pwedeng mag-buy, short buy sa area na to. Yeah, pwedeng mag-short buy dito. 5 minutes more. Running down. Okay. Ayan na. Ano kayang balita? Tingnan natin kung ano ba. Support area. Okay. Okay. Go back to 4 hour. USD carriage oil rig count. May 8:00.
What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's energy independence executive order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
Payment for order flow is controversial in the USA. It is prohibited on UK, Canadian, and other markets, but not when trading in the US. In the US, a market maker pays your broker to trade with your US stock order at a price he decides, but not at Interactive Brokers. We do not sell your order to a market maker. We try to match you up with an institutional order at a better price.
Origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with Adobe Illustrator files, and we have a whole design team who then we kind of work together to help create layouts of what it might look like, scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress. And sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics, going into a blackened room and laying out in a body of water and salt that's heated to your body temperature. And it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. Learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is open, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube and we evacuate that out. We introduce the gas into it. And we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when you see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an agent transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and the lights on. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it.